Jay from the Crypto Arc, and what I'm going to talk about in this video is crypto's price volatility, the thing that scares a lot of people. But there's a way for you to understand the volatility so that way you know how to make profits from it. All right, before I get started, I just want to say this is not a financial advice video. I'm just documenting my journey in this fourth industrial revolution that we're in. And also, yeah, I speak to a financial advisor if you want to learn about or look into getting into crypto. All right, the volatility and how you can make profits from it. So, its volatility is what scares a lot of people from wanting to get in because they don't understand how the market works. When they get in, it's usually around this stage right over here, the thrill and euphoria stage, because that's when their friends or someone they know is telling them like, oh yeah, I made a lot of money. And also that's also when mainstream media is putting it on blast, like all these people making money, this and that. But once they position themselves around this price area right over here, they get slaughtered as the people that purchased around here start taking profits. And then that's when they start talking crap about it, not wanting to get in because they were just in pain and their ego and their pride can't handle it. But little do they know, the anger and depression stage of the market cycle is the best time to get in. You're getting in at a discount, right? And crypto is a new asset, thinly held, so yes, it's going to be super volatile because of that. All right, so I'm going to use this is Bitcoin's chart over here. Okay, so around this stage, some geopolitical event is happening, right? And then money gets printed, and then it moves to risk assets like crypto. Boom! So people that purchase around here or maybe around here, when it's boring, they benefit all that volatility right over here, and they start taking profits. But unfortunately, that's when the sheep start moving in. Then they become, uh, you know, exit liquidity, and they get slaughtered on the way down, while the people that position themselves on the low are happy, enjoying their vacation and stuff, flaunting their, wealth. And then once that ends, it doesn't fully end, right? It just starts a new cycle. And then once again, we're in that boring stage, the anger and depression stage for people that got in at the top. And then all of a sudden, it does the same cycle again, right? It starts moving up. This is around the pandemic area over here. So as you can see, boom, made a sharp turn on downside, right? That's when, that event in the pandemic was announced. And then once again, yeah, people move in around this price range because all of a sudden people are making money and they're just flaunting it to everyone. And then people get emotional, like, oh yeah, I want to make money too because if this dumb guy can make money, so can I. And then they become exit liquidity over here. Boom! And then all of a sudden, they're the ones that look dumb. And the people that understand it, they move in again over here. And then they just rake the benefits. But anyways, yeah, as you can see, it's the end of the graph. That's because we're still in the cycle right now. We're in the process of this thing called the super cycle. All right, high price volatility continued. So October 10 is also another event that I want to talk about because that's when a lot of people got liquidated. And it's right over here. So we were around 125K or so. We're ranging in that price. All right. A lot of people, just based on the 4 year cycle of crypto, thought it was gonna go a little bit more and more. But then something happened October 10. Boom! I remember this day. I was at school. I was volunteering. And then on my way home, I saw a negative 600 balance in my centralized account. And I was like, what the heck? I've never seen this before. It turns out a lot of people got liquidated. There was a massive liquidation event, right? 20 billion got liquidated that day alone. That's a lot. It's the biggest in crypto ever. And yeah, it did a V-shaped recovery as much as it could, but it never went back to 125 just yet. All right, this cycle is not done. So why volatility matters? Because of volatility, it's harder for people to trust crypto as a store of value. Businesses struggle to price goods or accept payments without risk, so like it's hard for them to price things at like, let's say 0.25 Bitcoin, because 0.25 Bitcoin could be different from today to tomorrow. right? Because of that. Don't worry, there's solutions for that. Anyways, investors face emotional and financial stress during sudden crashes, as I've shown you guys in various examples, and this slows down mainstream adoption and innovation. Right? So let's move towards this chart right over here. So ever since the creation of the Fed around 1913, the value of the US dollar has been going down right over here. Its purchasing power has been going down because they keep printing money. However, the prices of goods, services have been going up. Now, in this case, I'm talking about crypto as the goods or commodity or currency. Its purchasing power keeps moving up because people are hedging their money in risk assets like crypto. That's why, yeah, it keeps going up. So stabilizing the market. So we have these things called stable coins. So like similar to the native currency of your country. I'm in Canada, so we have the Canadian dollar. It stays at $1. And the US, they have the US dollar. It stays at $1. We're gonna have currencies just like that in crypto. It stays pegged to a stable coin. So let's say you're a person that put in $1,000 in the crypto market, and then all of a sudden, in a couple months or maybe a couple years, that $1,000 turned into $10,000. So rather than just staying in there hoping that it stays there, you can de-risk your all that value by moving into a stable coin. So that way, you keep that $10,000 or $9,000 in profit instead of watching it go all the way down and you cry about it. And another thing that you can do to stabilize your wealth is to do ETFs, right? Behind these ETFs, you have professionals that are managing your money for you, and they're regulated. And these professionals are professionals. They know what they're doing, right? They understand how to read the market. They know how to make money whether it goes up and or down. That's the beauty about them. All right, so here's some examples of crypto ETFs that exist as of right now. We have Bitcoin ETF by Bitwise. This is a very brand new one, January 26, which is Avalanche AVAX ETF issued by Van Eck. And you have another famous one over here, Ethereum, right? You got institutions like Franklin Templeton, Bitwise, Galaxy Digital, Fidelity, Grayscale, so on and so forth. So a lot of ETFs are coming out, and more are going to come for other cryptocurrencies. All right, so regulations. With more rules equals more stability. And yes, the Digital Asset Market Clarity Act by the US, this is not set in stone just yet. We're waiting for Donald Trump to sign it, but they keep kicking the can down the road. As of today, January 28th, yeah, January 28th, it's still not signed yet. They keep pushing it, and I don't think it's gonna get signed until either right before Jerome Powell leaves office, which is around May, or possibly right before Donald Trump's midterm U.S. election, which is happening in November. Because once this is signed, what's going to happen is that bigger institutions are going to move more money towards crypto. So the market's going to look green. So by the time the midterm election happens, the markets will look green and it'll make Donald Trump look really good in front of the people. All right, it woos them. And in Europe, we had the MiCA rules. So they established rules across Europe to ensure stablecoins remain stable, safe, and properly audited. And yes, these frameworks are needed in order to reduce risk, increase public trust, and it helps prevent the kind of instability seen in past crashes. So this is why the future looks more stable, is because of those regulations with stronger safeguards and clearer rules. Stablecoins and ETFs are giving users safer entry points in the market. So if you want to, de-risk yourself, you can move into a stablecoin, or if you don't want the headache, go into an ETF. Give a professional the headache instead of you getting that headache. You can just give them the money where you just screw off and do whatever, frolic around. Governments and institutions are actively working to reduce volatility and protect consumers, and crypto is evolving from a speculative asset into a more reliable financial tool. Now, another thing that you guys gotta understand is that crypto means hidden meaning. It's not designed for me and you. It's designed for the robots and artificial intelligence. Once you understand and accept that, you'll see why crypto is a precious commodity because it's for them. And I'm sure the past couple of years or so, you've noticed that there are more AI popping out. And once you realize AI agents are coming in to replace a lot of people's jobs, you're gonna see why crypto is very, very valuable. All right, so yeah, volatility is real, but so is progress. There's gonna be more regulations happening. I mean, like set in stone. So don't be scared, man. Just understand how the crypto market works or the crypto cycle, and learn how to position yourself so that way you can rake in the benefits of the volatility, right? And you don't become exit liquidity. Anyways, guys, if you like my insights, please do me a favor. Press that like button, comment your thoughts, share this video, and also subscribe. Thank you so much.